Hello and welcome back to Core Finance in association with the Next Exchange. I'm joined today by Brian Stockbridge, who is Chief Executive Officer at First Sentinel. First off, Brian, thank you very much for joining us here today.
Thank you.
So Brian, would you mind explaining to our viewers and investors or potential investors what you do at First Sentinel, where you operate and how effectively you make your revenue?
Yeah, so we're based in Mayfair. We've raised about £1.5 million so far, so we're quite small at the moment, but we focus on investing that money to maximise returns for shareholders. And what I tend to focus on is ways that we can reduce the risk in any investment. So if I can get various layers of security or various protections for shareholders, typically in the form of a loan or a debt sort of investment, but I can capture the equity upside when things go well, then it's the best of both worlds, and you can reduce the risk for people, but you can maximise their returns as well.
And what is your criteria for investments? What are you looking for, and where are you looking for this value?
Yeah, well, I think there are lots of companies on the market. Many are listed, and I tend to focus on listed companies because they've already got through certain sort of milestones, and the corporate governance is quite good. But typically I'm looking for opportunities that can give at least a 20% IRR all the way up to a much higher number. So that can then translate for returns for my shareholders in First Sentinel. So there are lots of resource companies, and we tend to focus on that area because they're the sorts of companies that have the assets that can grant security over, they have the liquidity potentially in the share price, and they have the blue sky potential when things go well.
And would you say you operate as a merchant bank? Would that be the case, or a traditional model that some may think of?
Yes, First Sentinel PLC is, I suppose, the investment arm. That's the company that invests the funds into opportunities. We also have a corporate law firm, a stockbroker, and a corporate finance firm, all part of the First Sentinel group. They're not part of First Sentinel PLC in the corporate sense, but they all come together really to offer advice and fundraising opportunities and investment to corporates.
And with regards to deals, I believe you recently announced an investment. Can you just update us on that particular deal and what it means?
Yeah, I'm pretty excited about this because this is we've made 3 equity investments and 4 debt investments, but this is the first real sort of acquisition that we've made. And part of the problem I had is we'd raised just under £1.5 million, but I was sat on the money just waiting for the right deal to come along, and that's quite an expensive thing to do. We have to be invested, we have to be making returns, but we have to be doing the right sorts of deals. What we looked at now is acquiring 80% of a company called Perennial, which is an invoice purchasing company in Australia. So they started off a few years ago. They were doing £7 million a year, Aussie dollars a year of investment. They're now up to 60 million Aussie dollars of invoice purchasing per annum. What I like about that is the model is very interesting because they finance crash repair centres where the insurance company pays the invoice. So they can make very, very high returns, but the money can be circulated very, very quickly. And in that regard, this then offers me the potential to deploy capital into this without waiting for other deals to come through.
And with regards to deploying capital, you're not just looking at, say, UK companies, prime example, Australian companies. So your net is cast quite widely globally.
Yeah. I think it's finding the right company, that's listed on the right exchange, or that has the right sort of profile to generate returns for shareholders. And that can be the right assets. It could mean that we're financing the company at the right stage in its life cycle. And typically in the resources sector, if you're the first person investing, then sometimes you do quite well because you've got in at a very low value. But if you've invested in the second, the third, or the fourth funding round, potentially you're going to be squeezed down with further dilution. So the key thing is being the last man in. If you're the last one that puts the funding in, then you control the shots. And what we're doing at First Sentinel is almost guaranteeing we're the last man in, because we lend the money, we get security, and we also capture the equity upside. So if we have warrants or revenue share or anything like that with the company. So what we're effectively doing is making sure that even if things go badly with the company, if the equity value gets wiped out, then we sort of still sit above that because we're in a secured position, and we're then able to help the company to raise further finance without diluting our own position.
And these funding rounds and financing, it's quite hard for an individual investor to get involved directly with the company. So you obviously bring that layer of expertise and accessibility that the individual chap on the street wouldn't have access to.
I think it's a key thing because people can go out and they can buy equity and they can buy shares in a company, but typically these structured debt investments are not available to the public. They're typically done by institutions, and they have their own sort of private shareholders. They do the deal. What I'm trying to do is open this up to people now so that it's more accessible, and the man on the street can effectively invest in something like this.
And you mentioned obviously investing in listed companies. Yourself at First Sentinel have become listed. You're on the next exchange. What benefits has that brought to your company?
Yeah, I think it does a few things. One is increased sort of visibility. The second is there are some pretty stringent corporate governance requirements, so people know things are being run effectively. And I think again we've raised just under 1.5 million so far, and the next exchange facilitates the ability for us to raise further capital as we deploy that into investments.
And you're an alternative investment fund manager, an AIFM. Are you regulated to operate in this space?
Yeah, so we're a small registered UK AIFM from the FCA. The other parts of the First Sentinel group are all directly authorised by the FCA, or corporate finances rather.
And as a business, are you profitable at the moment? And if not, do you aim to be, of course, and if so, when? Yeah,
so the plan is always to run the company in a cost-effective way in order to give returns back to shareholders. So we floated in March, April. I think July, August was the first investment we made, because as I said earlier, we were sat on cash waiting for the right things to come across. Our year ends December, so I think what we're looking to do is to sort of pay dividends on next year's numbers effectively. But in the meantime, we're looking at ways we may issue some sort of bond instrument, which would then pay maybe a quarterly interest going through for bondholders at that point.
And just finally, what are your future plans? Let's look, say, 2 years, 5 years down the line, and how do you expect to achieve them?
Yeah, well, I think we're going to grow significantly because, every single one of the debt investments we've made have generated some pretty significant returns, very, very high returns, actually. What we need to do is scale that up a little bit now, certainly focus on the invoice purchasing company that we're now sort of focused on providing funding lines for. That should return some very, very good, consistent and short-term returns back to investors, and really look to grow that business, because in the UK the invoice purchase factoring business is about £3 billion. It's growing by about 5-6% per annum. It's forecast to continue to grow. In Australia, that growth is even more pronounced, and there's a significant number of other companies that we can perhaps roll up into this model to really expand the business. And already it's gone from, as I said, 7 million a year to 60 million a year in 3 years. So we're going to hope to continue that level of expansion as we move forward.
Well, it certainly sounds like an exciting space to be in. In the meantime, Brian Stockbridge, Chief Executive Officer at First Sentinel. Thanks very much for joining us.
Thanks.